Hi stock investors, JJ here. Welcome back. Well, I've got two clips to react to today. Finance news, stock market news. The second will be Nasdaq pullback is buying opportunity for companies spending on AI, says Deepwater's Gene Munster. And the other one is from Jefferies, an analyst from Jefferies, saying that on the tech sell-off is a rotation inside big tech. What does he mean by that? Well, let's get into that first. Let's get into it.
Posting its worst day since October of 2022. That wasn't that long ago, and it was a terrible period. Remember back then we hit some lows, led largely by...
Okay, let's just quickly look at that here. We can see that the heat map here, if we look at that, we can see that another down day for the Nasdaq today. Microsoft going down, Nvidia continues down, all these big techs except for Tesla staging a comeback here. But Nvidia, the chip stock's going down, so that's where we are today. And also, let's go back one day. We can see here one interesting thing is the Russell 2000 actually beat the other indices today. Both of the S&P 500 and the Nasdaq both going down. So that's an interesting trend that is continuing. All right, let's get back to the video.
By underwhelming reports from Alphabet and Tesla. Joining us now, Brent Thill. Very easy to say Brent Thill would be very close. Does that ever happen to anyone, Brent? You're an analyst at Jefferies. I mean, I have a little...
I've been called worse.
Either one word. We got a few of these big names to go. Is it going to be, is it going to rhyme? Might not repeat itself, but do you think it's going to rhyme with big tech? Will it be disappointing, or have we had the shakeout already just from those two reports?
Yeah, good morning. We think we've had a lot of the shake. Look at even last night, ServiceNow, IBM, good software numbers. So I think we're seeing a rotation inside of tech. We've seen a huge outperformance of semis and the internet. You've seen underperformance of software. And so our belief is software in the back half of the year will start to begin its move back up based on the underperformance and pretty good results. So if you look at last night again, two bellwethers in software, good numbers, no signs of massive demand cracks. I think we have an overbuy.
So what he's saying is there has been an underperformance in software SaaS, which has been doing so well the past few years. AI came along, and the thesis was there, I think, that software is going to be disrupted. Some people are still saying that the AI will decrease the need for some of the SaaS software, the subscriptions. You know, we can all think of companies that we subscribe to maybe that might be disrupted by AI, possibly.
Bot situation in a lot of the semi names. You've seen such a massive run. Many of those names are up between 40 and 100%. Internet was up about 10, software up about 2. So again, I think you're seeing a little bit of everyone out of the pool yesterday, timeout, reassessing where they want to go after their swim time. And we believe, again, there's going to be a mini rotation, nothing to take away from semis, and we think the fundamentals are alive there.
Okay, we look at Nvidia there, 131% year to date. So that's what he's talking about. The chip names have had a big run. What he's saying is that some of these, and mega caps as well, have had a good year. They've started to pull back there. Again, back to that graph, we can see here just in the past month, we can see that the Russell 2000 is up 9.92%, while the Nasdaq and the S&P 500 are both down for the month. So definitely rotation there. And what he's saying here is that there'll even be a rotation within tech here to back to more of the software names. Remains to be seen, but there's definitely a pullback in those mega caps so far and in the chips.
But right now, I think ultimately, we've seen money come out across the group, and a lot of that money actually went into financials, industrials, other subsectors beyond tech. So that's what we saw yesterday. Again, a couple good reports last night. So our belief is a lot of the clearing event has been put in, and there may be a little more to go in terms of the rotation. But again, we think there's some attractive subsectors now, like software.
Is there something you can point to definitively for what makes the Russell 2000 suddenly more attractive to people? Is it an interest rate cut? Is it the notion that maybe the AI craze has gotten, at least for the main players, has gotten a little bit ahead of itself, and you're looking for maybe beneficiaries that are further down the chain? I mean, what do you attribute it to, and how far will it go?
Well, just as I see it inside tech, and that's my seat, I think you've seen just an overcrowding in a handful of names: Amazon, Google, Microsoft, right? And so there's a broadening event that's going to happen. That's number one. Number two is what you said on the rate cut. That should effectively help. Three is the increase in M&A. So we're seeing a material pickup in software M&A. You've seen a number of transactions from strategics and privates. Obviously, a lot of the smaller mid-cap names downstream, they're not buying the large ones because we can't get those through the regulators. So we think there's a number of factors in helping that out at this point.
Okay, so that's rotation to small caps, as I talked about here. What did seem to trigger it, the main catalyst for that was for the CPI that came out that was softer, meaning that the possibly a rate cut. Well, I'm not going to say sooner than people think, because at the beginning of the year people thought 6 to 7 rate cuts this year, which didn't happen, which is the difficulty with predictions here. But this move to small caps, I've noticed that in my portfolio, absolutely for sure, because I'm keen on small caps and the rotation has been pretty heavy, so I don't mind. And speaking of portfolio here, I am happy to say that I've partnered as an affiliate with ShareSite to give my community, my viewers, a special offer here. Now, if you don't know what ShareSite is, go to this referral link in the description, and there's this landing page here with the offer on it. You can also join up for free just to check it out, and then you go to premium later if you want to. But ShareSite is basically a reporting and tracking tool for your portfolio. So I've got 2 different brokers, and it puts the portfolio in the same place, so I can track the true performance. It includes dividends, it includes all that. It does it much better than any kind of broker would do it. So that's why I use it. If you go to this page, you can see down, and you can see this video here it explains what it does quickly, but this page has got a lot of information. So as I said, go to the description and check that out if you want to get that offer. All right, we're going to go to the next video now with Gene Munster saying that Nasdaq pullback is a buying opportunity. Let's see what he's got to say.
Guest says the Nasdaq's 3% drop yesterday is not a reason for concern. It's a buying opportunity, and he's eyeing one group in particular that stand to benefit: aggressive spending plans, AI infrastructure companies like Arista and Broadcom. Let's bring in Gene Munster. He's managing partner at Deepwater Asset Management. Gene, okay, let's rewind. Tell me the story of the 24 hours that goes back to Alphabet's earnings and what happened to the market and whether it was justified.
So Alphabet didn't give any new incremental data points about the progress that AI had made over the last 3 months. That spooked investors. They had rolled out their generative search to the US and UK, and investors were hoping that they were going to say something more around the monetization piece. They also...
It's all about AI, that they're referring to Google earnings coming out. And people were disappointed that that was good earnings, but the focus was on AI and getting to earn some money on that, which isn't happening yet. And right today, as I speak, just today, the OpenAI is coming out with their search. They've announced that they're playing around. They've been testing a search product, a specific search product. So that's possibly going to spook Google investors as well. I haven't checked that, but I wouldn't be surprised if Google was down again today. Actually, let's have a look. I do have that. So where is Google? Google down nearly 3% today. So that did occur. That did happen.
When they talked about the CapEx, they said that CapEx would be above what it was in the first quarter. And so some investors were reading that would be a little bit of a slowdown in CapEx. So that combination, I think, really spooked the AI trade. And so I think that was the genesis of this pullback. It kind of gets us to down 8% or so from the July 10th high, at least for the Nasdaq. That's similar to what the pullbacks we had kind of during 94 to 99. But to answer your question,
94
Kelly,
to 99. So just to be in context, he's very bullish. He's bullish on tech Tesla, he's bullish on a lot of tech. So he's referring to that 94 to 99 period, which was the dot-com bubble. So he's basically calling for that. That's going to happen. So from his point of view, this is just a blip in the road here along the way to much higher for tech and these mega techs as well, and for AI related stocks.
That was the reason for the pullback.
And so that's a good setup for what you're going to say next about where investors should be looking and why you have confidence that this pullback was, I don't know if we'd say undeserved, but not something to worry about more broadly, in your opinion.
Exactly. And so think about the AI trade in terms of these segments. I think the next 1 to 2 years, it's really all about CapEx. And I mentioned Sundar's comments about CapEx. He also said that they need to continue to invest to stay relevant. Last night, Zuckerberg was on a podcast. He said that if they don't keep spending in AI, they may miss the biggest opportunity in the next 10 to 15 years. They may overspend, but they cannot slow down. So I just want to zero in on that CapEx piece because it's critical. We mentioned Broadcom, Arista Networks, some of these companies. But
yeah, that's true. They are saying this, that there's definitely a lot of capex going from these big techs buying from Nvidia, but they don't want to miss out. And they've said that they can use the infrastructure if it doesn't work out the way they expect. They can still use that. They can still use the capacity somewhere else, so it's not wasted, even though their spending are big. And if it does work out, if they end up making a lot of money from AI, starting to they've got the infrastructure in place and they're ready to go there, or it can ramp up. But so they're sort of saying it's a win-win situation for them, even though they're spending a lot.
But as long as the infrastructure is being in place, as long as these big tech companies continue to invest, which I think that they will be spending more than what most investors believe over the next couple of years on CapEx. As long as that happens, number one, the chips, the hardware companies will continue to work, and separately, it lays the foundation for the applications to work. We saw a bright spot related to ServiceNow last night, and so I'm most optimistic because that CapEx number, if I was going to boil it down to 1 point, it's going to be higher for longer, and that's good for AI.
So,
all right, so we've seen that there. So I'm going to put links in the description to these clips. They are longer. I'm just playing partial clips here. So I'll put links there in the description. Also, don't forget the link to a share site there if you want to check out that offer. And on screen now, I'm going to put a link to what YouTube thinks that you should watch next. So go and see that now if you want to. And also a subscribe link to this channel, relatively new channel. So do subscribe, follow along. And thanks everybody for watching, and I'll see you in the next one.